invest in IRA and an S corporation? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's episode, I want to talk to you about the ways, big if, you can invest an IRA into an S corporation. So before we talk about what an IRA is, let's talk about an S corporation. An S corporation is essentially a corporation that files an S election. And why would you file an S election? Well, you file an S election because you want the company to be treated as a pass-through entity, kind of like an LLC or partnership. Okay, so all income, gains, losses flow through to the shareholders without a corporate level tax. So C corporation, think of it as a big box. There's a corporate level tax, which is 21%. And then there's a shareholder tax on any dividend that is distributed to the shareholder. So if Adam owns 100% of a corp, and let's just keep things simple, $100, the corporation has $100 in net profits, and it pays 21% tax. The corporation then has $79 left. If it then decides, for example, to dividend all the money, all that $79 back to the sole shareholder, me, Adam, then let's say my tax rate is 20%. I'm going to pay 20% on the 79, okay, and leaving me with, let's say, 65 bucks. If I had an S corp, there'd be no entity level tax. So that $100 would all flow through to me, and assuming I have a 20% rate of return, a 20% tax rate, then I'd have $80. So 80 is more than 64, and that's the reason why a lot of people like to go S over C. Another reason is both corporations and S corps have the W-2 framework, right? That's how you get paid. If you're the owner of the business, you W-2 yourself. Well, what you can do with an S corp is you could take a very low W-2, okay, or a reasonably low W-2. Hopefully the IRS, it passes muster with the IRS, and then the W-2 income is subject to, self-employment, not self-employment, but Social Security and FICA taxes, Medicare. Whereas the distributions, the flow-through income from the S corp is not. So people play games and they give themselves a lower W-2 and then have most of the income from the business flow through as a pass-through income to the shareholder and get around these Social Security and FICA tax. The IRS is not dumb. They've looked into this stuff and they really want you to take a reasonable salary, and they'll audit you. They'll audit S corps, and they do that, making sure the owners are not taking too low of a W-2 and trying to save on the Medicare Social Security taxes. So again, just to recap, no double taxation with S corps. You still have a limited liability protection, and a C corp has double taxation. That in itself is the primary reason why companies do S elections. Okay. The one thing, if you do an S election, and don't ask me why these rules exist, I don't know, but there's actually shareholder restrictions on who can set up S corps. So everyone can set up a C corp, an individual, a company, a trust, anyone, foreigner. But an S corp, number one, has to be a domestic S corp. The only eligible shareholders are individuals, certain trusts and estates, and no foreign people. Can't have more than 100 shareholders. Only one class of stock. Okay, only common. Can't have preferred. So you can't be an ineligible corp either, like a certain financial institution or insurance company. So you can be a domestic U.S. company, have less than 100 shareholders. Mostly your shareholders must be individuals, U.S. individuals, some trusts, and yes, a 401k can technically own an S corp. The problem and why a 401k doesn't want to own an S corp is because it will trigger UBIT, right? An S corp is a pass-through entity. So if a 401k invests in a pass-through entity, the unrelated business income tax regime is triggered. That could potentially cause a 37% tax on income above $20,000 or so allocated to the 401k. So technically a 401k can invest and be a shareholder of an S corp, but they got to deal with UBIT. An IRA, here's the bad news, an IRA cannot be a shareholder of an S corp, unfortunately. An IRA cannot. A single member LLC can, But the owner of that LLC cannot be an IRA. It's got to be an individual. Why? Because the single member LLC is a disregarded entity, and you'll look through the disregarded entity to look at the owner. And if the owner is a IRA, then that is not possible. Just like if the single member LLC was a corp, that wouldn't work either. So just remember, it's not an IRA rule. This is an S Corp rule that limits who can own an S Corp. Okay. So again, only certain trusts, not an IRA, individuals, US individuals, one class of shares. So unfortunately, an IRA cannot invest in an S Corp. How can an IRA get money into an S Corp? Well, first, the company could reverse its S election. They could opt out of the S election. This could be done. Okay. You obviously need to be the owner of the business to do this, right? If I invested in a large S Corp, let's say there's 70 shareholders, $100 million, and I'm going to own 0.5%. And I'm like, hey, I want to use my IRA. I'm going to put 30 grand in. Can you get rid of your S election? They're going to laugh at me. But if I'm going to put in $1 million and I'm going to potentially own 30%, maybe they'll say, okay, we'll get rid of our S election for you. We want your money. We'll do it. But again, reversing the S election means you're going back to a double tax regime. You're not going to get the flow through losses, things like that. So it's not always so easy to do, but it's something you can do. The second way to use IRA funds in an S Corp is do a loan. An IRA could be a lender. It could lend money to the S Corp. Yes, the IRA won't get the upside, which is why a lot of IRA owners do not want to just be a lender. They want to be an equity investor, right? If you are just a lender, if you were a lender to Elon Musk when he set Tesla up and lent him 100 grand at 10% return, all you'd get is your money back in 10%. Whereas if you invested the 100 grand in Tesla as a shareholder, you'd probably be worth, a few $100 million. So obviously the equity is the upside. The loan is seemingly more stable and secure, but again, depends how secure the loan is. So all in all, it's kind of a trick podcast topic because an IRA cannot invest in an S Corp. Sorry. I'm usually a pretty straight arrow guy, but I don't know the way the topic worked out. 401ks could technically invest in S Corps. They are approved trusts, but you're going to deal with UBIT, unrelated business income tax, if you do it. So if you are looking to invest in a business, you need to ask, hey, are you a C or an S Corp? If you see LLC at the end, it's an LLC. If you see Inc. or Incorporated or Corp at the end, that's when you need to ask, are you a C or an S? Obviously, publicly traded companies are all C Corp. Why? You can't have more than 100 shareholders in an S Corp, and every publicly traded company out there generally has more than 100 shareholders. So most startups, companies that are looking to raise money will be C Corps or LLCs. They will never be S Corps. S Corps are really smaller companies, family run, closely held. So just be cautious. It's unfortunate. I've talked to many people where they're literally fund their account, they're ready to go, and then they upload the shareholder agreement to our compliance department, and our compliance department sees S Corp or asks, are you an S? And they say, yeah. And they're like, we can't do the deal. And then it causes all kinds of friction and we got to restructure. So that's the whole point of this podcast. It's all about education. Hopefully you now know that an IRA cannot invest in an S Corp, ways around it, have the company remove the S election, which can be done, or do a loan in, or use personal money, potentially use 401k money if you're willing to deal with UBIT. But other than that, there may not be a lot of options for you. So thank you for listening. If you're watching on YouTube, really appreciate it. This is a weekly podcast that drops every Tuesday, so don't miss it next week. And appreciate you guys spending some time with me today. Have a great day. Hope your summer's going amazing. And I will talk to everyone again next week. Take care.